LLC versus S Corp. What does it mean? What's the difference? And can it really save you a ton of money in taxes? I'm about to explain. Hi, this is All Up in Your Business. I'm Aiden Durham, business and branding attorney with 180 Law Co. in Colorado, and I have helped hundreds of clients set up successful and tax-efficient businesses. While I do not claim to be a tax expert, I know just enough of the basics to be dangerous. And so I talk with my clients a lot about taxes, tax deductions, and how to best structure their businesses to minimize their overall tax liability, at least as much as possible. Usually a client will come to me saying they're not sure if they should form an LLC or an S Corp. They're not sure what the difference is, what it really means, if they really need one or the other, but their sisters, cousins, brothers, girlfriends, nephew said that they own a business, and they said you definitely need to set up an S Corp. So I'm going to explain to all of you exactly what I explained to all of them. What it means to be an S Corp, the tax differences between an LLC and an S corporation, when it's beneficial to be an S Corp, and more importantly, when it is not beneficial. So this video in particular is going to be a lot about the what and the why of S Corp. What is it? Why do we care? Next week's video, though, is going to be all about the how. How do you become an S Corp if you've decided that's the right move to make? So if you haven't subscribed yet, hit that subscribe button and be sure to click that little bell so you get a notification when I post a new video so you don't miss next week's video or any others. All right, S Corps. Before we really dive into it, let's start with some of the basics. We first need to differentiate between an entity and a tax classification. An LLC is a type of legal business entity. An S corporation is not a type of business entity. It's only a tax classification. An LLC is not a tax classification. It's only a type of entity. So first things first, LLC entity type, S corporation tax election or tax classification. So whenever we're starting a business, LLC, S corp, whatever it is, we're starting with the entity type. Most commonly, this is going to be an LLC or a corporation. Now, don't confuse corporation with S Corp. They're not the same thing. A corporation is, like an LLC, a legal type of entity, but a corporation isn't a tax classification. So you pick the entity type, LLC or corporation, and then we move on to how's this thing going to be taxed. There's a default tax classification for both types of entities. If you form a single member LLC, the default is that it's taxed as a sole proprietorship or as a disregarded entity. There's no LLC tax classification with the IRS. The IRS doesn't tax you as an LLC. They tax you as a sole proprietorship in a single member LLC by default. Similarly, with a multi-member LLC, the default tax is as a partnership. Again, there's no LLC tax classification. Single members get taxed as a sole proprietorship, multi-members get taxed as a partnership. And with a corporation, the default tax classification is as a C corporation. So we've got the corporate entity type, but then we've got the tax classification as C corporation, which means it's being taxed under the subchapter C of the Internal Revenue Code. And so either entity type can elect to be taxed in a different way than what it would be taxed as by default. So an LLC, single member or multi-member, can elect to be taxed as an S corporation instead of its default sole proprietorship or partnership classification. And in the same way, a corporation can elect to be taxed as an S Corp instead of a C Corp. So that's the first big thing to get out of the way, the difference between LLC as an entity and S corporation as a tax classification. For the rest of this video, I'm going to be focusing on a single member LLC that is electing to be taxed as an S corporation for my examples and stuff, but the rules generally apply regardless of the entity type, because it doesn't matter what the entity type is. We're worried about the tax classification, which is S Corp. So the question of what's the difference between an LLC and an S corporation, the only difference, aside from some procedural differences, but the only difference is how they're taxed. So the real question isn't LLC versus S corporation, it's sole proprietorship versus S Corp, or partnership versus S Corp, because we're comparing the tax classifications. And there is no LLC tax classification. But like I said, we're talking about LLCs electing to be taxed as an S corporation. So the owners of an LLC are called members. Members of an LLC aren't considered employees of the LLC, and they can't be employees by tax rules and stuff. They're members. Members aren't paid a salary. Instead, they're paid through distributions of the LLC's profits. But when an LLC elects to be taxed as an S corporation, the members can now pay themselves a salary and distributions. And this is where the fun really comes into play, because the IRS taxes salaries differently than they do distributions. Hot take here, you guys. The IRS wants to collect taxes. I'm just kidding. That's not a hot take. I'm pretty sure we all know that. The IRS cares about taxes. In this context, primarily, they care about employment taxes and income tax. Like I said in the beginning, a single member LLC is by default taxed as a sole proprietorship. And in this situation, the LLC is considered a disregarded entity or a pass-through entity. The IRS is disregarding the entity structure and is just taxing them as a sole proprietorship. And so it's a pass-through entity, meaning that the money passes through the LLC and goes to the member. And the member can't be an employee, can't be paid a salary, so that passes through as distributions. And distributions are subject to employment tax and income tax. A multi-member LLC works the same way, but instead of being taxed as a sole proprietorship, it's taxed as a partnership, and it's still considered a pass-through entity. The money passes through the LLC to the members in the form of distributions. And again, those distributions are subject to employment and income tax. But if an LLC elects to be taxed as an S corporation, then the members can now become employees, and the income generated by the LLC can be paid in the form of both salary and distributions. The salary part is subject to employment tax and income tax, but the distributions in that case are not subject to employment tax, only income tax. There's no employment tax on the distributions. It's only applied to the member's salary. So that's the big main difference between an LLC and an S corporation, is that the distributions in an S corporation aren't subject to employment tax, only income tax. And this is where you can potentially start seeing some significant tax savings. When you're in business for yourself, this whole tax thing can be really complicated. Speaking from personal experience, and even as someone who has a degree in finance and a law degree, one of the very best things you can do for yourself and your business is get a trusted tax advisor on your team from like the very beginning, as soon as humanly possible. If you want to know what else you should be doing when you start your business, in addition to finding a good tax advisor, check out the link in the description to download my free new business checklist. Okay, so now that we know kind of the concept behind the differences between an LLC and an S Corp, let's look at some numbers and do a little math to see how it actually works out. Now, heads up, please. I'm rounding numbers and I am grossly simplifying things here for demonstration purposes, okay? I just want to help you guys understand kind of the concepts of how it works, not all the intricacies of tax law, all right? So employment tax Total is 15.3%. To make my math easier, I'm going to round that down to 15%. Your income tax rate is going to depend on your tax bracket. Again, to make things easy, I'm going to say 25% income tax rate. Now, again, please remember I am grossly simplifying all of these numbers. The US tax system is a progressive tax system. There are different tax brackets, and just because you fall into the upper tax bracket doesn't mean all of your income is taxed at that amount. It's progressive. So if you make up to the amount, up to X number is taxed at this rate, up to X number is taxed at this rate, and so on. So it's not like a flat tax rate like I'm going to be using in this example. Again, this is just so you guys understand how it works. The math is not exact. This isn't exactly how things work in real life, but it's so you guys can understand the concept behind how this works. Okay. There's also like limits on employment tax, and I'm not taking into account any kinds of deductions or credits or anything like that. So just don't come at me with that this isn't how taxes work. I know this isn't exactly how taxes work, but the idea is that this is how an S Corp works. Okay, so 15% employment tax, 25% income tax. Let's say our business has a taxable income of $150,000. In a single member LLC, the IRS is going to look at it as if you took a distribution of $150,000. So that $150,000 will be subject to the 15% employment tax and the 25% income tax. So that's what? 40% of 150,000 is what? 60,000? I'm just kidding. I bet you guys think I just did all that math in my head. I didn't. I had to calculate it beforehand and I wrote it down. Anyway, so 25% tax plus 15% tax on 150,000 is going to be $60,000 total taxes due for that single member LLC. So now same situation, but this LLC has elected to be taxed as an S Corp. $150,000 taxable income, and let's say the member has taken a salary of $75,000. The employment tax plus income tax on the salary equals $30,000. The income tax only on that remaining $75,000 distributions equals $18,750. Add those two together, and we've got $48,750 total due in taxes, saving you close to $11,000. So $11,000 approximately saved as an S Corp versus a single member LLC taxed as a sole proprietorship. So we can see here how those numbers can break down to save this taxpayer $11,000 in taxes. So we're thinking, great, this sounds spectacular. Why don't we all do that? Well, while there is a lot of benefit to an S Corp, there are also a lot of drawbacks in electing to be taxed as an S Corp, and it's not the right move for everybody. The first drawback of an S Corp is that you have to pay yourself a reasonable salary. Think of it kind of like what you would reasonably expect to pay another person for doing your exact job. The IRS has given us guidance and opinions on what is and isn't considered reasonable, but there's no like bright line rule of, all right, you do this, this is your reasonable salary. It's up to us to figure out what that reasonable salary is. And if the IRS doesn't agree with us and doesn't think that it is indeed reasonable, then they can, revoke the S Corp election and charge all kinds of back taxes and fines, and could get in, some sticky situations if you're not paying yourself what the IRS considers to be reasonable. So that's the first drawback, is that you have to make sure whatever you're paying yourself as a salary is reasonable. There's also just more cost and effort involved as an S corporation. You have to run payroll. There's more complicated tax withholdings and tax filings, and it's almost always going to require the help of a tax professional. I've seen some folks give estimates that like the cost of making an S Corp election is around like $2,000 to $3,000 a year. Yeah, of course that's going to vary from business to business, but that's kind of a good starting point is, let's assume the cost of being an S Corp is going to cost us be about $2,000 to $3,000 a year. So keeping that in mind, let's think back to that previous example that I gave. Same situation, except let's say there's a $50,000 taxable income instead of $150,000. So $50,000 taxable income for a single member LLC, tax as a sole proprietorship. Again, it's a total of 40% tax rate if we're including employment and income tax. So 40% of that $50,000 would result in a total tax bill of $20,000. But now we're doing the S Corp election. And so the taxable income is still $50,000, but as an S Corp, the member has to take a salary, and let's say that salary is $45,000. So that $45,000 salary still has employment and income taxes applied to it. So that'd be about $18,000 in taxes on the salary, and then just the income tax on that remaining $5,000 distribution. That would be $1,250. So as an S Corp, the total taxes would be what? $19,250 compared to $20,000 as a single member LLC. So assuming that cost of $2,000 to $3,000 for the S Corp election, that means that we're paying $2,000 for the year in order to save $750 in taxes. So you can see there that it's not always going to be beneficial. You may save in taxes, but that might be negated by what you're paying in addition for the benefit of being an S Corp. And there are also some limitations with regard to like reinvesting money back into the business as an S corporation too. If there's a surplus of money and you want to reinvest it back in the business, that doesn't always make sense as an S corporation. So those might be situations when an S corporation does not make sense for you. If you just don't want to deal with the extra hassle and cost, if you're not generating enough profit to outweigh that added cost, if it's not going to be worth it, then what's the point? But there are a lot of situations where the S Corp election is going to be very worth it. So situations where you should make an S Corp election is if you know you're going to be making a lot of money and you want to take all or pretty much all of it like to pay yourself. I mean, strictly speaking, if you're not making enough money, then the S Corp's not going to do you any good. What the heck does enough money mean? There's no bright line rule of when you're making this much money, you should be an S Corp. Some people put strict numbers on it, if you're making $100,000, you should definitely be an S Corp. I don't like to look at it that way. I take a kind of practical approach. If your business is making enough money that it can sustain itself and you, if you're able to take enough money to, live the lifestyle that you want to live, and in addition to that, the business is making enough money to sustain itself, then that might be a situation where you want to explore the S corporation election. That doesn't necessarily mean that it's going to make sense for you, but that would be a situation where it would be worth talking it over with your tax advisor. If you don't know how much money your business is going to make, or if you're just starting your business and you don't know what your profit's going to look like for the year, you don't have to make the S Corp election right away. You can do it later on, especially for folks who this is their very first experience being in business for themselves. I almost always, unless we are 99% sure you're going to be making well into the six figures, I almost always say, hey, let's give it a year, see how this first year goes, see how your numbers look, and then reassess and talk about making this election next year. If you're going to be making a lot of money and you want the ability to reinvest some of that back into the business in the current year, then it might make more sense to stay taxed as a sole proprietorship or a partnership, not making that S Corp election. And if you plan on having a big surplus of money and you want to reinvest that back into the business maybe in future years, then that might be a situation where a C corporation makes more sense. So as we can see, this whole tax thing, like I said, is pretty complicated, and it gets even more complicated when we start talking about S corporations. Making an S Corp election is not something that you should do lightheartedly or without really thinking the whole thing through. It can have a good implication, good impact on your business, but it can also have a very negative impact with anything that has to do with taxes. Anything that has to do with taxes, and really anything that has to do with any kind of law. It's always best to consult with a tax professional, CPA, or a tax accountant to help you determine if the S Corp election is going to make the most sense for you in your business. Because like I said, you have to start doing payroll. You have to figure out your reasonable salary. You have to do additional filings and more complicated tax filings. And these are all things that if you're trying to run a good, profitable, successful business, you shouldn't be doing this stuff on your own, unless your business is a tax business. But if you're doing anything other than tax, then you probably shouldn't be doing this yourself, and you should leave it to the pros. And there's a lot of other stuff that you want to do when you're starting a business, in addition to getting a CPA or tax advisor on your team. If you want to know all that other stuff that you should be doing, check the description for a link to download my ultimate new business checklist for free. If you got value out of this video, hit that thumbs up button and share this video with all of your friends and family, and spread the good word of All Up in Your Business. And be sure to check some of my other videos for more legal tips and tricks. And don't forget to subscribe so you don't miss next week's video, where I'm going to tell you how to make an S Corp election if you've decided that's the right thing to do. Thanks so much for watching. I'm Aiden Durham, and I'll see you next time.